Hi everyone, my name is Kaustubh Kale. Hope you guys are doing super duper awesome. In this video, we will understand what exactly is inflation and which are the assets that can help you tide over inflation. So, firstly, what exactly is inflation? There are two kinds of inflation. One is your normal inflation, where the cost of goods increases gradually, slowly. The second is luxury inflation, where the standard of living increases and because of which the your spending increases. So, we'll understand both here. Now, why does inflation impact us? If you see, inflation is nothing but when the demand exceeds supply and the prices of the goods go up, that is basically inflation, which is your normal inflation, where the cost of goods increases. The second is luxury inflation. In luxury inflation, what happens is because of our increase in standard of living and because incomes have been increasing, people tend to spend more on certain things which they did not few years back. Let's try and take examples. Now, if you go to the 90s and say that what was the price of the movie ticket, maybe you would have spent say 20 rupees for watching a movie. Now, currently, people spend more than 500 rupees for watching a movie. If you see petrol prices, maybe it was 10 rupees per liter then. Currently, it is above 100 per liter. If you compare a course for a good MBA or engineering, maybe it costed say 40, 50,000 in the 90s. Currently, it may cost 25 lakhs, 30 lakhs or so. If you used to dine out, now having a dining out in 90s say costed you about 70 rupees, 100 rupees for a meal. Currently, it may cost you say 1,000 rupees, 2,000 rupees also. So if you see, this has been how inflation has been impacting us. It includes both cost of goods increase as well as luxury inflation. Let's try and understand luxury inflation with one more example. When we had to buy a mobile, say 5 years back or 10 years back, we used to keep a budget of say 7,000 or 10,000. Now, when we are buying a mobile, people generally start with a budget of say 30,000, 50,000, or even 70,000. So, this is how increasing incomes and increasing demand and supply has impacted our life and has impacted inflation. So, what is the actual reason behind inflation? There are two reasons behind inflation. First is demand and supply increases, and the second is incomes increase. For both these reasons, if you see, it goes hand in hand because demand and supply, when it increases, it happens because incomes are increasing, and second is population is increasing and demographic changes are happening. So people are earning more, hence spending more, and since the population is also increasing, the demand for a lot of these goods and services is increasing. So whether it is your movie ticket, whether it is dining out, whether it is petrol, whether it is MBA engineering courses, whether it is say household items like toothpaste, sugar, milk, onions, all of that stuff, you will see that the cost is increasing and inflation is impacting, because of which you are spending more. How will this impact our future? Say, assume I am currently spending 30,000 as my household expenses. Inflation is generally between say 7 to 10%. Let me assume it at 10% for me now. Every 7 years, this household expenses will gradually double. So right now it is 30,000. In 7 years, this will become 60,000. In 14 years this will become 1,20,000, and in 21 years this will become 2,40,000. Now you will say 30,000 abhi kharch kar raha hai, 2,40,000 then after 20-21 years seems such a huge thing. But please understand and compare, check with your parents and grandparents. They must have watched a movie in 70s and 80s or 60s at less than 1 rupee, which may be even 50 paise, and currently we are spending more than 500 rupees for it. So if you think 2,40,000 is something which is far fetched as an inflation, as a household expenses figure because of inflation 20 years down the line, then that may not be the case and it will certainly happen. So that is why, assume if anyone wants to retire in 20 or 21 years and his household expenses currently is 30,000, he will require a corpus then to be built, which will be able to give him 2,40,000 per month for his household expenses till the time he is alive. Which are the assets that can help you beat inflation? There are only three assets that can help you beat inflation. First is equities, which is investing in stocks. It can be directly in the form of investing in stocks or in the indirect way by investing in equity mutual funds. The second is gold. The third is real estate. Now, in real estate, the issue is we don't mean invest in mature markets, mature metros, or by taking a loan and investing. And because of these reasons, the problem that happens is it has high entry barriers. So there are only two assets that remain, which a normal retail investor can invest to beat his inflation. The first being equities, which can be either direct equities or equity mutual funds, and the second being gold. At least 30 to 50% of your monthly income should be invested in these assets, which is equities or gold, for beating inflation and for your future financial goals, which are say 5 years, 7 years, 10 years, 15 years, 20 years down the line, and so on and so forth. So to reiterate, only three assets, equities, gold, and real estate, will help you beat inflation. If you think by investing in any other assets, whether it is ULIPs, LIC plans, insurance plans, saving bank deposit, fixed bank deposit, or any other bonds, debentures, any other instrument which gives you fixed returns, guaranteed returns, where your capital is preserved and is safe, will help you beat inflation, then that's the wrong notion. It will not help you beat inflation. And if you see it from a risk standpoint, if you think by investing in other slightly risky assets, which reduce, where the risk is actually reduced when you sit for the appropriate time horizon, if you think by investing in these slightly risk assets you are actually putting your capital at risk, then that is not the case. But in fact, by investing in assets which don't beat inflation, if you invest there, you are losing out on the capital by risking your opportunity cost, where अभी आज जितने यूनिट्स बाय कर सकते हो उतने यूनिट्स आप नहीं बाय कर पाओगे इन 5 years down the line, 7 years down the line, because your inflation will eat the capital. So if you measure it in terms of number of units or services, you are still risking your capital. Please understand. So this was about inflation. What are the important aspects of inflation? Is there are two types of inflation. Standard cost of goods sold, cost of goods increase inflation. The second is luxury inflation, where your standard of living increases. You have to invest in certain assets to beat this inflation. Only two assets help retail investor here. First is equities, second is gold. So please invest in these assets and beat your inflation so that your purchasing power remains and your corpus for your retirement and other financial goals help you. Thank you so much, everyone. Hope you found this useful as well as interesting.